So it's been a good week for markets and for portfolios following the first round of the French elections, where Macron is now the clear favourite for the runoff in early May. As you can see here, European currencies performed extremely well, and you also saw quite a lot of inflow into European markets. Also had a classic risk on trade in terms of a weaker yen, which has helped the Nikkei this week. In terms of sectors, as one would expect, the financials have been very strong on the back of that election win. We've also seen the French 10-year be bought and that yield come down, so the spread between the German and the French 10-year bonds has narrowed quite significantly. That positive market was sold into in the second half of the week on the delivery of the Trump tax plans, which was a one-pager which really didn't warrant too much more analysis than saying what he'd said in the campaign. Despite that, though, we still continue to see real signs of optimism coming through in the US corporate area in terms of the CEOs, and that's starting to feed more and more into the data. So there's been a lot of analysis of the differential between soft data and hard data. So soft data is sentiment and survey data, hard data are things like employment number and GDP numbers. And here you can see that the soft data, i.e. the sentiment data, has picked up, but those hard calculated numbers have not picked up yet. But we are starting to see that coming through in the numbers, and obviously we've been through an extremely dense reporting season with 245 companies reported since the 13th of April, but here you can see a 65% beat on the revenue line and an 80% beat on the earnings line, and that really is showing that confidence coming through. In terms of the Nasdaq, that went to new highs this week, and last night we had Amazon and Google, or Alphabet, its parent company is called, report, which both reported very strong numbers. Here you've got the Nasdaq, which obviously performed pretty well, on the same chart, rebased to 2004 when Google IPO'd. As you can see, they've significantly outperformed the index, and I think it just illustrates the point that as more investment comes into the tech space, they are using those two companies as platforms and backbone for their innovation, and therefore you're still getting this geared effect in terms of share price performance. The other key and interesting point this week was the differential in terms of results from Comcast, which is a cable business and delivers very high rates of data speed, and Verizon, which is a mobile network business. Here you can see the two charts side by side, just illustrating the point that data usage is extremely important, but getting even more important as more and more people stream services with high data rates. In terms of the week ahead, it's going to be another really busy week. In terms of the macro, we've got the FOMC meeting. We've also got the non-farm payrolls on Friday. In terms of reporting, two key areas. So we've got the UK oils reporting, so BP on Tuesday and Royal Dutch Shell on Thursday. And we've got two big techs in Apple, which will be reporting on Tuesday as well, and Facebook on Wednesday. That's it from me. Thanks very much.